We start today's market talk. You can't catch the tide if you are not in the water. So there is a reason because of which the experienced people often say that time in the market is more important than timing the market because it is cannot be predicted up moves and down moves so accurately. A perfect example is to drive home this point is what occurred last week. So what happened last week was the Bulls got back in the driver's seat on the Dallas Street. There was a sharp up move higher, which meant Nifty has erased losses for the year. It moved 2,000 points from April lows. All 15 sectoral indices ended with gains, while mid caps and small caps underperformed. So I'll just show you. See, these are the all indices, sectoral indices. The best performance was in finance, bank, real estate, PSU banks, etc., defense, and all that. While FMCG, IT, etc., were underperforming, but all were positive. These were performing because there was a rate cut and there was general momentum in the banks, and real estate because it has been bombed out so much that, and because of likely lower home loan rates, this was bouncing back. Now, banks have announced reductions in the deposit rates on offer. Some like HDFC Bank, ICICI Bank, Axis Bank have also announced cuts in their saving account interest rates. Now, this will help because this will help in lowering their NIMs. RBI did a second rate cut in policy this week. To expand their NIMs, banks are now lowering their saving rates to around 2.75%. So the guys among the banks who are taking market share in deposits will have lower cost of money or lower credit cost as compared to the smaller banks which are losing market share in deposits. So if you saw HDFC Bank results, the credit cost has come down, the loan to deposit ratio has come down, and their net interest margin has improved. Same thing with ICICI Bank also. So this is what is the key issue. Now this next point is very interesting. Trump's policy undermining the dollar have helped get in foreign investors exiting the US. So it is very clear what is happening now is that the FIs are coming back. They are covering their shorts. I'll show you subsequently, and buying in cash. And roughly $2 billion of money moved in 3 days, and it has taken the markets up directly, led by private banks. Now, what is happening is dollar is depreciating against major currencies. Now, historically, a reversal. This is historically a reversal from previous crisis situations where global panic drove demand for US dollar higher. So every time there used to be a crisis in the world, the dollar used to go up. This time it is other way around. Now what used to happen was through mechanisms like currency swaps, Fed ensured dollar remained highly liquid and accessible even during market turmoil. Now what is happening is because of bad attitude from the US, ECB, Bank of Japan, and People's Bank of China have all implemented currency swap arrangements with central banks in emerging and developing nations. So reliability of currency swap lines would create the most significant impetus to global de-dollarization. I'll explain it in detail. Now, what was the Fed's currency swap lines were doing was, these were agreements between Fed and other central banks to exchange currencies to provide foreign currency liquidity to institutions in other countries. So what used to happen was, say, it happened even in COVID times or in 2008 global financial crisis, all the countries used to fall short of dollars to trade, to do imports for essential commodities. So Fed would establish swaps which act as a liquidity backstop during times of market stress when there is a shortage of US dollars abroad. Now, these swap lines were used in 2020 to help prevent global dollar shortages during COVID-19 pandemic also. So they used to give them on interest payment based in exchange for their local currency. They used to supply them dollars, which these guys could trade. And once the situation is over, they would return the dollars and pay the interest costs. So these swap lines provided a safety net for global financial stability. And because of these swap lines, people knew that the Fed will help them in times of crisis. So it was a reserve currency. Now, let's fast forward to 2025. What Trump administration is doing is it is thriving on uncertainty and disruption. So people are not sure whether in the next crisis will the Fed or the US administration will help them or not. So Fed used to act as global lender of last resort. It boosted confidence among foreign governments, central banks, and investors to hold dollar reserves. So if you have a confidence in the liquidity part of the currency, you will hold them as reserve. Now, through mechanisms like currency swaps, Fed ensured dollar remained highly liquid and accessible to everyone, even during market turmoils. So that kind of confidence people had. Access to liquidity solidified dollar status as the dominant global currency for trade and investment and reserve holding. Now that is off, so people are now started at least opening swaps with ECB, Bank of Japan, and People's Bank of China, each operating in their own sphere of influence. So what this will lead to is that even if it will reduce the role of dollar as a safe currency and currency used for transactions in the world. Now, tariff war is becoming a dangerous superpower rivalry. Why it is becoming dangerous? It is becoming more dangerous to the US than anybody else. US high-tech and military industries face disruptions due to rare earth requirement. There are certain very important metals which only China produces, roughly 60 to 70% in the world. Now, global high-tech supply chains risk collateral damage from US-China trade war. These products, which have been put under export license, only China has put them under export license. They have not stopped their exports, are vital for US defense manufacturers, including F-35 fighters, missiles, UAVs, and submarines. This is the reason Trump is targeting Greenland, which has significant deposits of rare earths, and pushing for a deal with Ukraine. So there is a logic behind going after Greenland. It is not just for the sake of grabbing some land, because they have a lot of rare earth deposits. So they want to establish supply lines other than China. Now, beyond defense, magnets run most in today's electric motors, making them vital for EV electric vehicle production. Now, China's JL Mag Rare Earth Company, one of the largest producers of these magnets, supplies to even Tesla. That is why Musk is not very happy with whatever is happening in terms of trade with China and in terms of all the tariffs which have been put. US decision to hike tariffs on Chinese goods to 145% is a huge blow to Chinese exporters also, who sell roughly $500 billion worth of goods to US. So all the cheap stuff which Walmart and Amazon sells is in trouble. Realizations that high tariffs will make American goods expensive, which use Chinese parts like Apple, etc. Trump reduced tariffs on computers, smartphones, and semiconductors. But he is threatening that he will bring them in another way. Now, what is happening in India is RBI is cutting rates. Inflation has collapsed to 3.34%, a 6-year low. So MPC has shifted its stance to accommodative, delivered a 25 basis point repo rate cut, expect further easing of rates in June, drop in food prices and crude oil prices, which should also help in lowering inflation, and cheaper loans due to lower cost of borrowing could spur housing, auto, and business investments. That is why you saw the real estate was the best performing sector last week. Now, gold, as you all know, is going through the roof. This is being supported due to central bank increasing reserves. Ongoing uncertainty in trade is boosting sentiment for gold. So this I have shown you. Now, let's see the FIDI data. So if you see last week on end of the week, they were net short, FIs were net short, 1 lakh odd in positions in index futures. It has come down, and they are adding long positions and reducing their short positions. It has come down, but they have added long positions in stock futures. There are a lot of long positions in all these HDFC Bank and ICICI Bank, etc. So that is a risk. In case profits are booked, they will come down. Index options, etc. They were earlier short. They have reduced their short positions. And in terms of stocks also, they are buying in cash. So on Thursday, they bought some 4,668 crores in cash. Pros have started reducing their short positions and they've added a lot of long positions, around 13,000 odd long positions on Thursday. Clients are bearish. As usual, they move opposite and they are adding short positions. And index options, they are adding short positions here also. Again, not understood why they are doing this. DIs are selling now. They sold in cash roughly 2,000 odd crore. They were buying last week. Now, if you see the data, it's very simple to understand. 3 days cash burn, roughly 16,000 crore, that is $2 billion. Market moved up from in 3 days from 23,300 to 23,850. 500-point movement, just 3 days of cash buying and short covering. So every day they have covered their shorts and added longs. So net impact is seen. So this thing though actually started on 11th April also, last day. But one more thing you must notice is that the same thing happened last expiry also. By 27 March, they were all bullish. They reduced their short positions, and after that they started adding short positions, and now again they have reduced their short positions. So we'll have to see how they trade after this month's expiry, which is on coming Thursday. Coming to US government bond yields was coming down, but then they again rose because Powell expressed concerns about higher than anticipated effects from tariffs, and then Trump criticized him for not lowering rates. What Powell said is that since we don't know what is the total impact of tariffs, so we can't really understand what will the impact on inflation, so we'll wait and watch. Trump wants him to lower rates, and now he is talking about mulling over whether to sack him or remove him. So it leads to more uncertainty. So don't expect US bond yields to come down very quickly. But the dollar is coming down. It is now clearly trading below 100 level, dollar index. Right now, it had a steep fall and it is consolidating. But after the path is down, in my opinion, maybe in 2-3 weeks after consolidation is over, it will head to this 93 or 94 level. The USD INR depreciated. Actually, it should have gone up. It should have, it is right because the dollar is depreciated, so rupee strengthened actually. Yeah, that is right. So rupee strengthened to around 85.4, but that is not good for because there is a lot of dumping of Chinese goods which is now taking place in India. US indices. So if you see here, S&P 500 in the last 9 weeks, it has only had 2 green weeks. Rest it has had 7 red weeks, 7 negative weeks out of 9. Tariff developments are continuing to sour the sentiment. And now what happened was NVIDIA and AMD reported that new licensing requirement to export chips to China will impact their earnings by 8 to 10% in calendar year 25. That spoiled the sentiment. This update contributed to majority of week's overall market losses. So S&P lost 1.5%, Nasdaq was down 2.3%, and now it is clearly below the rising trend line. And Dow also fell around 2.66%, again below the 20 EMA and below the trend line, though it took support at 50 EMA. So let's see where it goes. Brent crude continues to be below the 70 benchmark, basically because of slowdown in the world economy because of tariffs. Gold is hit that $3,300 to an ounce and is on a real upward trajectory. Copper, it had come down, bounced back. So it is in right now not very clear as to where it is going to go, because uh, at end of the month, a lot of contracts are closed also. So because of that, there is some short covering. Bitcoin is stable, is not moving much. It is in this range only, so there is not much of volatility here. Now, what happened with India VIX was India VIX fell after going up last week. It went up to 23 odd level in one day from 13, 14 level. And after that, it has been falling steadily downwards. So, and I've been pointing out that look for India VIX, because this will determine because how the trading will take place and what is the volatility during the day and all that. So hopefully it should come down below 40 knot so as to reduce the intraday volatility. Uh, Government bond yields, Indian government 10-year yield based on the lower borrowing, rate cuts, etc., has now reached 6.37 level. So when we had started talking about it, it was at around 7.2. So there is a lot of market to market gains, which everybody, all banks and all holders of G-Secs would be making. So this G-Secs only will, if it's a 10-year bond, will give you around 9-10% return in a year as the yields go down. Now coming to Nifty, Nifty made a strong green candle last week. As it crossed the 200 EMA, the 20 EMA on the weekly chart, it has become positive, and now it is heading higher. What had happened was last time it went there, it made this gravestone doji. So then it reversed, came back, but this time it has gone up with a strong long body candle, suggesting a follow-through action. Now, how much it will go? So let's see on the daily chart. On the daily chart, during this week, what happened was 3 days. On Wednesday, it closed above the 200 EMA. So that is the point at which everybody became positive. And then there was a big follow-through rally on Thursday. So if you see the whole fall which has taken place from this 26,280 odd levels to 21,800 levels. So in this whole fall, the 50% retracement comes to around 24,017. So that should be the first port of call, roughly 24,000 level. And after that, 61% comes to around 24,500. So in my opinion, next few days, 1 or 2 weeks, or by expiry, you can go up to 24,550 level. Now coming to the hourly chart. So if you see on the hourly chart, it was flat for most part of the week. It was in this range, and then it took off on once it closed above the 200 EMA. It took off on Thursday. Maybe people were expecting better results, etc. So if you do a extension, Fibonacci extension from the lows it made on 7th April to the rise till 17th. So if you see here, the first target is around 24,355 and then 24,655. So suffice to say, 24,000 should get taken out. And then after that, may consolidate at 24,000 level, and then it clearly goes above that based on some more results, etc. Then you can head to around 24,500 odd levels. Nifty Bank is a clear winner. It is now at its all-time high. So on the weekly chart, same long-bordered, strong green candle, clear breakout with a gap. It is near its all-time high now, and based on these results, there is no reason for it to go down. So there would be some more momentum now and more money moves in here. So this should go up. RSI is also strong. So there should not be a problem. Now here, if you see, you do a fib extension of Nifty Bank daily chart. So this is at around 54,400. It was the last high. So once it goes above this, this is in that that blue sky territory. So first target is roughly 55,674. So that is normal move, and it is in good momentum. The RSI is 72, so it is in good, decent momentum. Hence, this is the one which I'm more confident on, and actually the Nifty Bank would lead the index, rest of the indices higher. The rise was led by HDFC Bank because it broke above the previous high and moved above 1900. So, moment this 1880 got broken decisively, then it moved up. Now, why I said SBI is looking good? It has clearly now broken out above the 200 EMA, which was providing it resistance. So it was always falling back here, and now it has moved up above the 200 EMA, which was at around 770, went to around 800. So now at round number it faced some this thing, but I think it should go up from here. And if you see here, it is forming a kind of a inverted head and shoulder here. So the depth of this inverted head and shoulder is roughly 100 points. So from 780, it can easily go to this 860, 870 or 880 levels. And after that may try to make a fresh high. That depends on results. People will wait for results, but the momentum is good here. Reliance has also done well last week. It needs to go above this declining trend line level and then above the 200 EMA, which is at 1300. So I think it will go as per the results now. If it goes up, results are decent, then it should go up, but otherwise it will come. The other reason for this momentum on Thursday was that there was a market rumor that tariff hikes will take place. So Bharti and Reliance, everybody was up. I don't think that thing is kind of possible. Now, coming to midcaps, they are still midcap select. This is still subdued. Like Nifty Bank and Nifty have broken out, but still this is below the 20 EMA on even the weekly charts and the daily charts. So this has risen from the lows, but it is still this thing. So it has to trade above this level, 11,600 or 700 levels for some momentum and then test the previous high. Same with small caps. They have risen from the lows, but still they are below. This is the weekly chart, so it is below this level. Along with them, even the IT stocks are not faring too well because the results of the last three were bad. It is just on the weekly charts at around 33,300 odd levels. If these levels break, then it will test this 26,000 or 27,000 last low it made, number of bottoms it made here. So it will test this level. Because the present condition doesn't provide any kind of strength, etc. Now, expectations from auto, FMCG and pharma are also not very bright. So their indices are also not performing. It is basically financial services and banks which are doing well right now. Mid caps also and small caps also need some repair and sentiments, etc. Right now, as I have seen, market appears more scared of China's retaliations rather than actions from Trump. Reason is his are gambits for negotiations. So these are kind of negotiating tactics. So people are not sure that he is not going to go that far. But what China could create is unanticipated accidents, which would really bring the markets down because they are not really trying to negotiate as such. Now, there can be number of unanticipated accidents because already they are facing, say, 245% tariffs. So what more can happen? They can try some adventure towards Taiwan, etc., which they could be sure about that seeing the condition of the US, which is very inward looking, they may not intervene or not intervene adequately and all. So this is a risk which market is facing. Now I'll cover two stocks today. As I had mentioned about sharks, I'll show you what is the difference between shark in the ocean and shark in a pond today. Now, firstly, talking about PG Electroplast. Post FY13, it moved up the ladder and strategically shifted its focus towards the products business from the plastic molding business. It is number 2 original design manufacturer player in washing machines and room air conditioners. Number one is Amber in room air conditioners. It has increased its RAC customer base from 8 brands to 30, mainly supported by strong capacity addition, backward integration, and cost competitiveness. It plans to set up a 5 million unit compressor manufacturing facility, phase one, which can be expanded to 10 million units over time. Now, what is going to happen is that the compressor, the BIS certification is going to expire on in 2027. After that, government has said, please manufacture the compressors locally. So by 26-27, India will sell roughly 20 million, that is 2 crore units of compressors, or of ACs, sorry. 2 crore ACs are likely to be sold in next 1 year or so. So if 2 crore ACs are going to be sold in a year, we make only 55 lakh compressors today. So there is going to be a big shortage of compressors. So that's why these guys are getting into compressors phase, or manufacturing compressors. They are also gearing up to enter the refrigerator business, which will further strengthen the product business. So again, there is the market for refrigerators in India is roughly 25,000 crore, and they're just gearing up to get into it. They did a joint venture with China Group, will explore opportunities in TVs, IT hardware, components, and others. Now, LED TV market in India is roughly 30,000 crore, and so you can judge that, and around 22 million units, that is 2.2 crore units, were sold in FY24 in the LED TV market. So how you can judge how big is the opportunity. It is also seeing higher earning growth with an improved balance sheet and return ratios. Expect revenue and earning growth of 57 to 54% over FY24-27. Now I'll show you as to how they are working. So FY 2014, they were earlier making only plastic bodies. So they were entered air coolers, then semi-automatic washing machines in FY 17-18, indoor units of ACs, FY 27 outdoor units of ACs, FY 21 top loading washing machine, FY 22 LED TVs, FY 23 window ACs, FY 24 JV with China Group to make laptops, etc. And FY 26 on the new segment, that is compressors. So they are moving into adjacencies in the respective field in which they operate. Now, just for your information, as we were talking about it, RAC sales in India were around 1.5 crore, expected to 2 crore next year in FY25. In FY29, they're expected to be 2.7 odd crores. EGEL has a capacity of 28 lakh indoor units and 18 lakh outdoor units. So there is a huge opportunity for anyone in this field, and the market is growing at roughly 20-21% CAGR. But there is a bigger market in compressors, PCBs, controllers, heat exchangers, fan motors, aluminum coil, copper tubes, which are 70% of the manufacturing cost of a AC. So it is not only the number of AC, it is the value addition which is driving the whole market. Now I'll show you. So you see how their revenues have moved up. It was moving at around 11% till FY16. Then it moved to 31% and is expected to go up by 46% over the next 3 years. So the main sales are in products which are ACs and washing machines. Rest are plastic molding, electronics, new businesses like compressors, etc., and molds. So if you see FY25, the major contribution is through product sales. So that has got higher margins, etc. Now, if you see here, this is trend now. So FY25, this is millions. So they have sold around 2,857 crores worth of ACs, right? So if you see here, 2,857 crores of ACs they have sold, and it is expected to go to 4,400 crore in FY27, and they have grown at 102% and expected to grow at 50%. But as per Voltas, the AC market will be 50,000 crore in FY29. So sees the market size and the kind of growth. Now, when I spoke about washing machines, so if you see here, they are selling around 465 crores. Air coolers 69 crore, huge markets. Refrigerators, they, as I mentioned to you, this is a 25,000 crore market, and in 27 they may reach 384 crore. So there's a huge market to grab right now for all these EMS guys. That's why everybody is getting into these kind of things like LED TV and fridges and all these things. Now coming to their profit and loss accounts. So in FY 26, they are expected to do around 6,289 odd crores. So grow at around 34%, 35% over the next 2 years. EBITDA margins are improving 9-10% now. That is consistent. PAT margins are around 7% because of value addition. So they are expected to do an EPS of around 9.4, which I think they should be able to do in FY25, and around 14.7 and 22.7 in FY26. So that we'll have to see. Let's assume 14 or 15 in FY26. So with the kind of growth they are having, they can easily be given a PE of around 60-70, seeing the interest and growth. So sales growth of around 35%. Net profit is around, growth is around 56%. So this is what I wanted to point out. If the net profit is going to grow at 50%, you can give it a PG, P to growth of at least 1 to 1.23 times. So that is why at 50% growth of profits over the next 2 years, they can be given a PE of around 60 to 70. So that should be reasonable because there's a growth. So at 60 to 70 PE at 14 or this time 15, it comes to around 900 to 1,000. So that should be the fair value for next year. So ROE, etc. is improving. Asset turnover is good, 3.8 times. Hardly any debt. So they are able to manage money for their growth, etc. Now let's see the chart. This chart made a high of around 1,050 and then corrected. It came down to around 700 odd levels in this dip on April 7th and then has bounced back. So every dip here, say somewhere close to 900, 870 level on bad days should be an opportunity to accumulate this stock, but don't expect it to become double in next 6 months, etc. Because a lot of good news is already in the price, and all those who are having this stock are not selling it. Hence, there is not much of selling which is taking place, and every dip gets bought. But you don't have to get after this stock on a higher level. So on a higher price. So wait for a dips to buy this stock, but this you can hold on. So you don't have to panic. Like if it goes to 1,000, start selling it, etc. There's a lot of value here, and they will continue to surprise you on the upside. Now coming to the other famous stock, Maharashtra Seamless. It is India's largest seamless pipes manufacturer with business ranging from seamless pipes, ERW pipes, and renewable energy to oil rigs. Now, what is a seamless pipe? This is a pipe manufactured without any welded seams. It is created from a solid piece of material, typically steel, that is hollowed out, generally stronger and more resistant to pressure than welded pipes. So you drill a hole through a pipe, so it is very strong. So that is what a seamless pipe is. ERW pipe is a electric resistance welding, electric current to heat and fuse metal parts together. So you have a strip, so you bend it and weld it together. It becomes a ERW pipe. It has installed capacity of 650 kiloton and 125 kiloton in seamless and ERW pipes, with 55% and 18% market share respectively. It caters to So remember, market share in seamless is 650, 55%. It caters to oil and gas, boiler, fertilizer, chemical, pharmaceutical, and automobile engineering sectors. It's a debt-free, generates strong cash flows, has an order book of 1,700 crore. I'll show you the yearly revenues. So order book is nothing great actually. It has production capacity of 550 kiloton. And is expanding the finishing line at its Telangana unit by 600 kiloton. So that's why earlier it was talking about installed capacity of 660 kiloton. It has guided around 435 to 450 to 500 kiloton of production volume by FY 25, 26, 27 respectively. 70% of the demand is from oil and gas and 15% from boiler, power and general engineering sectors. Contribution to his business to EBITDA is seamless pipes is 84% and ERW pipes is 7%, and balance is from, they have some plant, solar and wind 7%. Now the point is the whole market of seamless pipe is 900 kiloton and it grows at 4 to 5% CAGR. So, and they have 55% market share. So how much can they grow? I have my doubts. Because the market size is very small for this kind of business. So if you see here, and I showed you, they have an order book of 1,700 crores. So if you see here, it grew up and their margins are directly proportional to price of steel because that is the raw material. So the margins improved and their earnings also improved. So as the margins improve, as steel prices come down, the earnings improve. But this, I think, is peak earnings. And this is peak revenue also. Peak revenues have been seen in March 23, though peak profits because of better margins have been seen in financial year 24-25, ending 24. So they got, and because of this variability in their earnings, that's why they get a lower PE. So this year they are going to perform lesser than last year because margins are lower. Now seeing the charts, it has been in this range of 600 to 700 odd lot. And why the markets was very enthused? Because it is kind of making a symmetrical triangle pattern. So if you see, you can see a symmetrical triangle pattern being formed. And since this thing is coming from bottom, it is expected to go up. So that was the news. But in my opinion, this is not an investment grade stock. You can trade this because this is actually a shark in a pond because there's hardly any market size which is available for them to grow their business. I finished. We'll take questions now.